Energy. It really is the invisible force, isn't it? Powering, well, everything in our modern world. Your phone, the lights, the factories.
Absolutely.
Yeah.
And getting a read on a major player like Tata Power can tell us so much about the bigger picture, the
Yeah.
economy, the environment, where things are heading.
Exactly. So for this deep dive, we're going to unpack the latest Q1 FY26 results from Tata Power Company Ltd. They're a huge integrated power company. Our goal here is really to cut through the jargon, find the important bits, and figure out what these numbers really mean for the company and, yeah, the whole energy sector's future.
Right. And just so everyone knows, all our info today comes straight from the source. Tata Power's official announcements, their financial results, investor presentations, all for the quarter ending June 30, 2025.
Good. So solid ground. And as we get into it, you'll see, I think, well, there's some expected stuff, but some areas show really surprising growth, kind of hints at bigger shifts happening.
Definitely. Let's kick things off with the overall financial performance. The headlines are actually quite positive. Tata Power reported its 23rd consecutive quarter of profit after tax growth, PAT growth.
23. Wow, that's quite a streak, especially in energy, which can be so volatile.
It really is. So the big consolidated numbers for Q1 fiscal 26 versus last year, total revenue was up, but modestly, about 4%, reaching 17,464 crore.
Okay, 4% revenue growth.
But the operational profitability metric, EBITDA, that saw a much bigger jump,
Yeah.
up 17% year over year, hitting 3,930 crore. That's pretty strong.
17% on EBITDA, okay. And the bottom line, the net profit.
The reported CAT, yeah.
Yeah.
That also grew. It was up 6% compared to last year, reaching 2,262 crore.
Right, so strong headlines overall. But I noticed something a bit nuanced maybe. While the consolidated profit grew, the standalone PAT for Tata Power itself actually went down.
Ah, good catch, yes.
It dropped to 520 crore this quarter from, what, 737 crore last year. What's that telling us?
That's exactly why we need to dive deeper than just the consolidated view. It tells you straight away that while the whole group is doing well, the growth isn't necessarily coming from the, let's say, traditional core business anymore. It suggests that the subsidiaries, maybe the newer ventures, particularly renewables, are really the ones driving that overall profit growth. The standalone entity might be facing different pressures or maybe investing heavily.
Okay, so the subsidiaries are pulling more weight on the profit side.
Precisely. It means we absolutely have to look at the individual segments to get the full picture of where the company is excelling and, where the challenges might lie.
That makes sense. It really highlights why just looking at the top number doesn't give you the strategic direction, does it? Shows you where the momentum is. So let's dive into those segments. And you mentioned renewables. Sounds like that's where the big story is.
Oh, absolutely. The numbers are, frankly, explosive. The renewables business PTA surged to 531 crore. That's a massive 95% increase year over year.
95%. Wow.
Yeah. It's not just a small uptick. It clearly shows they're capitalizing big time on India's energy transition. Yeah. Renewables are becoming a core profit engine for them.
So is that huge profit jump mostly from new projects coming online, or are they getting more efficient with existing ones, or both?
It's a mix, but definitely fueled by adding capacity. Their operational renewable capacity is now 5.6 gigawatts, 5.6 GW, mostly solar, about 4.6 GW, plus 1 GW wind.
Okay.
And just in this past quarter, Q1, they commissioned 652 megawatts MW of new projects.
652 MW in 3 months. That's fast.
It is. About 94 MW was their own stuff, but a big chunk, 560 MW, was third-party EPC work. So they're building for others too. And they're planning to add another 1.6 GW over the rest of this fiscal year.
Okay, massive pipeline. What about specific deals? Any standout projects or agreements this quarter that show their strategy?
Yeah, quite a few significant ones. There's a big deal with Tata Motors for a 131 MW wind-solar hybrid project. That's expected to generate about 300 million units a year, cutting quite a bit of CO2.
Intergroup synergy there.
Exactly. They also got a letter of award for an 88 MW round-the-clock, or RTC, renewable project from SJVN. That RTC concept is important for providing reliable green power.
Right, not just when the sun shines or wind blows.
Precisely. And a big 200 MW firm and dispatchable renewable energy FDRE agreement with NTPC. That's another one aiming for reliability, projecting 1,300 million units annually.
Okay.
Plus some smaller but still important group captive deals with Fiat India and Tata Realty. So a real mix of customers and project types.
That's a diverse portfolio buildup. Now, it's not just utility scale, right? What's happening with solar rooftops and their own manufacturing? I heard there was some real momentum there, too.
There certainly is. There's still the #1 solar rooftop EPC company in India.
Hmm.
Over 2 lakh installations now, totaling more than 3.4 gigawatt of capacity.
Yeah.
That's a lot of roofs.
Leading the market there. And the financials for rooftop.
Really impressive this quarter. Rooftop solar revenue more than doubled year over year to 823 crore.
Yeah.
And the PAT up an incredible 260% to 90 crore.
260% profit growth in rooftops? That's huge for one quarter. What drove that?
Just a huge amount of activity. They did a record 45,500 installations in Q1 alone. That's 270 milliwatt commissioned, up 143% compared to last year.
Wow.
It really shows that government schemes like the PM Surya Ghar Yojana aiming for solar on 1 crore homes are genuinely stimulating demand. People want this. Tata Power is aiming for 3 million households themselves over 3 years.
Right. Tapping into that massive potential market. It feels like energy generation is getting more distributed, more democratic in a way.
It absolutely is. And supporting that, their own manufacturing arm, TP Solar, is doing well. It chipped in 100 crore in PITO this quarter.
So they're making their own panels and cells, too.
Yep, they produced nearly 950 millido of modules and over 900 milliliters of cells in Q1. So strong in-house capability. They're also rolling out new things like Mycenae Solar with battery backup and these solar roof design spaces.
Interesting. Okay, let's shift to transmission and distribution, T&D. Maybe less flashy than renewables, but utterly crucial, right? The grid itself. How's that segment performing?
Steady contributor. The T&D business PT came in at 440 crore. Now, the company pointed out that if you exclude a one-off item from last year, the underlying growth was actually a healthy 26% year over year.
26% underlying growth. Okay, solid. And I know the Odisha distribution companies, the discoms, have been seen as a turnaround success. How did they do?
Still doing very well. A real model, actually. Their PT grew significantly to 105 crore, up 156% year over year.
Huge jump there, too.
Yes. And critically, they're cutting losses. Aggregate technical and commercial losses, AT&C, which includes theft and inefficiencies, are down by an average of 3.5% across their areas in Odisha. That's a big deal for financial health.
Definitely saves money and improves service.
And they're pushing ahead with smart meters rolling out about 30 lakh across India. That modernization is key.
So better efficiency in existing areas. Are they looking to expand their distribution footprint, too?
They are. They've applied to expand their license in Maharashtra, looking at key growth areas like parts of Thane, Navi Mumbai, Pune, Nashik, and others. It fits their big goal.
Yeah.
Reach 40 million customers by 2030.
40 million, that's a massive customer base increase.
It is. And on the transmission side, building the highways for all this power, they've got 6 projects under construction, over 2,400 circuit kilometers. The target is over 7,000 kilometers operating by 2027.
Building out the backbone.
Right. And they've even launched a new venture, Cooling as a Service, or KaaS, basically providing outsourced cooling solutions for businesses. Shows they're thinking beyond just electrons.
That's innovative. Okay, so lots of growth and strategic moves, but it can't all be rosy. What about the traditional generation side? Thermal, hydro, and the international assets. Sounds like more of a mixed bag there.
That's fair to say. The thermal and hydro segment, while still essential for grid stability, did see a decline in both revenue and segment results this quarter compared to last year.
Okay. And the Mundra plant. That large imported coal plant has always had specific challenges. Status.
Still running under directions from the Ministry of Power, currently extended to June 30, 2025. Discussions are ongoing for a supplementary PPA, a power purchase agreement. It's a complex situation.
Understood. And international coal.
Yeah.
With global prices fluctuating.
Yeah, that volatility hit them. Production and revenue from their Indonesian coal mines, KPC, BSSR, AGM, were all down year over year, mainly due to falling global coal prices.
Right.
On a brighter international note, they did start selling power across the border from a small hydro project in Bhutan, the 18 milliW Suchu project.
Okay, interesting. So we've seen the revenue sources, the profit drivers, the challenges. Let's talk funding. How's the balance sheet holding up with all this expansion? What about debt?
Well, net debt did go up, both compared to the last quarter and last year. It reached 47,578 crore at the end of Q1 FY26.
That's a noticeable increase. Why?
Primarily driven by the high capital expenditure needed for all these growth projects we've discussed, plus higher working capital needs as the business scales.
Makes sense. CapEx and working cap.
And something else to note on the liabilities front, though it didn't impact this quarter's results yet. There was an unfavorable arbitration award against them in July 2025. seeking about USD 490 million.
Oof, that's significant.
It is, but Tata Power is actively contesting it. They've filed to set it aside in Singapore, and based on legal advice, they don't expect an immediate payment obligation. So something to watch, but not hitting the books just yet.
Okay, good to know the context. So even with the higher debt and that potential liability being contested, are the overall financial health indicators still looking okay?
Generally, yes. Ratios like net debt to equity and net debt to underlying EBITDA are still considered to be within comfortable ranges, and they've maintained stable credit ratings from the major agencies. It suggests they're managing the debt load alongside the growth.
That's reassuring. So they seem to have the financial capacity. What are the big strategic investments shaping the future, particularly on the clean energy and grid stability side?
One major one is in Bhutan. They've invested 120 crore for a 40% stake in the 600 million W Korlachu hydro project. It's a joint venture. Construction started late last year, aiming for commissioning by late 2029. Long-term clean power.
Hydro provides that stable, clean baseload.
Yeah,
What about storage? Pumped hydro seems crucial for balancing renewables.
absolutely critical. They've started work on the 1,000 million WB Puri pumped hydro storage plant in Maharashtra. That should be ready around August 2028.
A gigawatt of storage there.
Yeah. And another even bigger one, the 1,800 million W Shirwada PSP, is planned to start construction later this year, November 2025. These are huge projects like giant water batteries, essential for integrating more wind and solar reliably.
Right, storing energy when it's abundant, releasing it when needed. Essential grid tech. Now, beyond the financials and operations, Tata Power talks a lot about ESG, environment, social, governance. How serious are those commitments?
They seem very embedded in the strategy. They have ambitious, clearly stated goals. Net zero emissions by 2045, water neutral by 2030, zero waste to landfill by 2030, and no net loss to biodiversity also by 2030.
Those are significant commitments with clear deadlines.
They are. And it's translating into their power mix. Right now, 44% of their generation capacity is clean and green.
Okay, almost half.
The target is to push that to 70% by 2030, and eventually 100% clean and green generation by 2045, basically phasing out thermal power as the current contracts expire. It's a planned transition.
That's a clear pathway. What about the S and ESG, the
Yeah.
social side? Any specific initiatives there?
Yes, they highlight a few things. An initiative called Pay Attention that supports neurodiverse individuals in the workplace. An energy literacy program called EcoCrew, aiming to reach 3 lakh students about clean energy.
Educating the next generation, that's important.
And they also have a target to improve gender diversity in their workforce to 20% by 2028, so focusing on inclusion too.
So why does all this ESG stuff matter to you, the listener? Well, it shows how a company like Tata Power isn't just about making electricity and profit. It's actively trying to build a more sustainable, responsible energy system that affects everyone.
Couldn't agree more. So if we bring it all together, these Q1 results show Tata Power doing a complex balancing act, holding on to its traditional strengths while making a really aggressive and, importantly, profitable shift towards renewables and newer solutions.
Yeah, it's not perfect. Standalone PAT is down, international coal faces headwinds, that arbitration case is out there.
True, there are always challenges. But the overall momentum, particularly in clean energy and rooftop solar, in expanding their customer base, seems really strong.
And we need to keep that long-term vision in mind. 40 million customers by 2030, over 65% clean generation. It's a company undergoing a major transformation.
So maybe a final thought for you to consider. As you go about your day, think about how companies like this, mixing old infrastructure with brand new green tech, are fundamentally reshaping how your home, your work, everything gets powered.
Right. What do these deep dives into company strategies actually tell us about the energy future you're going to live in? Something to think about.